I'm told Gurmeet Chadda though has joined in, managing partner in CR Complete Circle. Gurmeet, it's great having you. We've had the full Complete Circle team today, right? Kshitij was up till 3 a.m. while he was on the mutual fund show with us, and now you are here as well joining in. So good afternoon to you, and thanks for joining in. Gurmeet, constructive on this, or this is a one-day event which has passed from an Indian market's perspective, the US election outcome that is?
No, Neeraj, I think pretty constructive. And I think maybe if China announces the biggest stimulus in a day or so, and if dollar strengthens a little bit more and bond yields harden a little bit more, you may see a little bit of volatility, but it's medium term extremely positive. One, from a point of view that India has very good relationship, although not that we had very bad relationship with the Biden administration, but it's like neutral to positive kind of a relationship. India will benefit in terms of China plus one theme eventually playing out in the medium term. From the near term, all this trade of sell India, buy China, I think will taper down a little bit. Might get extended tactically depending on the size of the stimulus. But in terms of a more medium term trend, I think we will taper down. So from a liquidity perspective, one thing which has been bothering us is heavy FPI outflow. I think that would probably cool down a little bit. And I think there's more opportunities coming up with China plus one trade. It's evident in the market. If you see what the EMS names are doing today, whether it is Dixon or Keynes or Sirma. Also look at some of the telecom equipment names like Tejas Network. See some of the textile names. I think already some glimpses of that playing out is visible in some of the stock movements. But what has happened is that despite the correction, we have seen easy money being made last 1.5 years. I think from here on, it has to be careful stock selection, careful theme selection, and figuring out where earnings are. And that's what the market is rewarding, which we have seen with the results gone by.
Careful stock selection is important, right? Because Newland Labs is a fabulous company, but it's an expensive stock, and the slip that has happened in this quarter has pulled the stock down 11.5 or 12%. In fact, it was down maybe 13% at a point of time. And the numbers look not the best. 25% down revenues, margins come off, PAT as a result comes off. Now this is, Gurmeet, way different than the recent trajectory, but maybe in line with what the company said that it'll be a year of consolidation, don't expect fireworks, but the reaction is very, very stiff here on Newland, 11% down.
Yeah, I mean, when you trade in double digit in terms of price to book, and mind you, the stock is up 10x from the lows of 12, 1800. If you recollect, this business is lumpy. So you got to look at more as the asset turnover ratio, how many molecules are in phase three, and what's the guidance is. So you will have lumpy quarters, and the stock also used to move up 10, 15%. We usually don't question when stocks go up 4, 5x, and we get put out when they fall 10, 15%. I think that's the nature of the game. We've seen that with Lawrence Labs in COVID period, where it shot up from 70 to 700. And then, nothing has virtually happened for the last 5, 6 quarters. So same with DBs, didn't do anything for a long while, was stuck at about 3,000 odd levels. And now, the stock has virtually doubled in a quarter or two. So I think that's the nature of the game. And I would be keen, you have to go here in terms molecule wise, where are you positioned? You got to be patient in this game, have a more spread out portfolio. And if Biosecure Act becomes a reality at some point of time, I think there is a huge opportunity in pharma outsourcing theme. Also, there's a lot of opportunity in antibiotics. There are a lot of plays coming up there. There are a couple of diabetes drugs which are pending approval in some of these cases, which could happen in next couple of quarters. To make a nice healthcare portfolio. The weightage is very, very small right now. It's just pharma, it's just 5% in BSE 500, which is too low in my view. And then hope that one or two turn out 5, 10 baggers for you the way Newland has the last couple of years.
Gurmeet, hi, Tamanna here. I'm just wondering why banks are completely staying away from the party. And then is it a good time? Is it a good time to enter banks now? Because, I mean, if you're looking for the next move up, they're very clearly, obviously and decidedly staying out.
I think they've stayed out for a long while now.
Yeah, but even today.
Yeah, I agree. And I think probably they want to wait for the Fed decision and making the positioning. If you see yesterday's pullback was led by Bank Nifty going up 1,000 points. So I think probably post Fed meet and the rate cut and little sanity coming in US bond yields, I think you will see participation. Also, they are very reasonably priced. That's the most reasonable part of the index. The entire Bank Nifty is today 15 times earnings. In terms of price to book, they are below their 10-year averages. I have not seen HDFC at 2 book value or Bajaj Finance at 4.5, 5 book value, or an Axis Bank around 2 book value, SBI book value, Federal Bank 1.2, 1.3 book value. Most of the banks, majority of them have been reasonably priced, and this is one part of earnings, with an exception of IndusInd Bank and a couple of others, has actually done well in this quarter, which has been quite subdued. So my sense is I think banks will come to the party eventually. I think probably a rate cut by Fed followed by a little more easing in stance by RBI. More than the rate cut, I think is also the commentary related to the stress they are seeing in microfinance and personal loans, etc. I think once that changes, I think the banks will join. But sooner or later, they will come to the party.
Can banks come to the party soon enough? And would it be specific banks, maybe an HDFC, maybe an ICICI, not the others? What do the charts suggest to you?
Is it for me, Neeraj?
Yes, Jay.
See, I am of the opinion that this is a counter trend rally in the banks. The maximum upside I'm seeing for the banking index is about 52,475 to 52,950. Most of the frontline names like Axis, IndusInd are breaking down, and in fact, I have a suspicion that when SBI comes out with with their quarterly numbers, it will not be pleasing the markets. So watch out for it. If SBI breaks 807, this rally that we saw the last few days, it's probably a bull trap. So, and I will be, in fact, if you are asked for a BKST call, I have conditional shorts on most of the private banking names. I'm looking if Axis breaks below 1124, it'll bring it down to the June 4th low in a few weeks' time. I doesn't do that, already breaking down today. So watch 1124 on Axis, 807 on SBI, and on ICICI, watch 1266. If these levels were to break, which I think is going to be the most probable outcome, I'm not preempting the market, but I have an anticipation. If those happens, the banking index will collapse, and it will take out the October lows. So watch out for it. I have a nagging feeling this rally that we saw in the banking index is a bull trap.
Okay, another sector or another segment of stocks that are buzzing are EMS stocks. Look at Syrma SGS. It's been boosted today in trade and over 30% for the month. Since the announcement of Q2 numbers, the electronic manufacturer has given returns of 44%. Why is that? Puneet joins in to tell us why not just Syrma, look at a Keynes Tech today as well, Puneet. That entire space is buzzing.
Yeah, definitely. And some of the reasons were highlighted by Gurmeet Chadha as well. It's a sector that's been buzzing. Valuations have been high, but the outlook from the companies after Q2 was one of the most positive things. So while Q2 was very strong, roughly about 80% growth for someone like a Dixon Technology on a very high base. Keynes also reported 65% growth in revenue, while Amber Enterprises was another one which had really strong revenue growth as well. That's one of the key reasons, and the outlook for H2, while is strong, they've given a reasonable guidance of what the company is expected to do in terms of products, business and strategy over FY26 and 27 as well by all players as well. So apart from that, there's one other pivot that specifically Dixon and Amber spoke about, which is a new PLI component scheme for the electronics. Now, while we know that companies like Dixon manufacture phones for someone like a Samsung, they don't manufacture the components yet, and there's a PLI scheme that might be upcoming. The company has highlighted that in its conference call as well, that it might be away for the next 3 to 4 months, but they are expecting it to come in very soon. What this will do is increase the content that someone like a Dixon manufactures in mobiles for Samsung, and currently they are around 11 to 12 percent for the total bill of material, which will go to 27%. So overall, more business for companies like Dixon. For Amber as well, it will be on the air conditioner side, where this will help the component space, and for all companies, they are looking for this as well. But that's one of the key reasons why the whole sector is also buzzing, apart from the reasons already mentioned. I want to talk about Sirma now because the stock is up 44% since 25th October when it reported its Q2 results. And while it was one of the, we'll come to valuation first, but for the business itself, revenue was, it missed analyst estimates, but the margins growth gave it a big thumbs up, and that was primarily because the company is lowering its contribution to the consumer business. Now, while there's a strong revenue growth in the consumer business, margins are slightly lower, and that had impacted in Q1 as well as the last year itself. Going forward, the company is expecting to increase contribution to industrial, automotive, and medical as a segment, and this will help these are all high margin businesses over the next 12 to 24 months, and that's one of the key reasons why Sirma has been buzzing ever since its results as well. If you see the the Q2 results, if I can have that across the segmental performance, the consumer business grew just about 8% in Q2, while the industrial, auto, as well as IT and railways and healthcare as well as the segment grew much faster. While the company has guided that 40% of the revenue will come from consumer in this year, it is expected to go down to 30% over the next 12 to 24 months. That's a big positive because that will help margins. Finally, if I can just get the valuation picture as well for all the companies across the EMS play, we can see that while the FY24 PE is just out of whack for all companies, FY26 price to earnings for most companies is also very high. So someone like a Dixon trades at around 79 times, while Canes and Amber are also expensive. But look at Sirma SGS now. It's around 37 times, around 37 to 40 times FY26. And that's one of the key reasons why the company has finally turned around the business, and the market is rewarding it now with higher valuation. So that's one of the key things as well. They have roughly about 4,800 crores of order book. That's roughly 1.5 times its revenue. And brokerage is also upbeat. Just want to highlight last thing is the brokerage is Nuvama maintaining a target price of 590. That's very close to the current price. They've essentially said that the favorable shift to higher margin business, as I mentioned, is a positive. And Motilal also has a target price of 550, where they've increased the EPS estimates for FY25, and so they say that they're expecting the H2 to be much stronger based on the strong order book. So overall, a big thumbs up to the sector, but Sirma SGS is something, especially after the Q2, that's been a key beneficiary as well.
Good, about 10% up. Now look at a Dixon. Dixon also doing fairly well in trade and looking exciting. Jay, just a quick view on Sirma and Dixon.
Yeah, Sirma is a relatively new listing. I don't have enough history to take a medium-term call, but the short-term looks quite positive. It's coming off a double bottom, and probably it's got higher highs to come through somewhere about 705. When it comes to Dixon, and this is most probably completing a blow-off top. It's probably going to reach about 16,600 in a day or two, and it's going to clock a blow-off top around those levels, and then drop to about somewhere to 11,100 to probably even 9,500. So very short-term highs left for Dixon. After that, it's probably completing a blow-off top.
Okay. Gurmeet, we spoke about banking briefly. I'm sure you've mentioned IT as well, because that's the big buzz of the day. I'm just wondering that this Trump excitement, how long does it last before we're back to business here in India? And then what happens in the next couple of days? Because two more events to look out for. One is the Fed meet, and the other is what China is doing. How are you seeing all of these factors?
So personally, I'll be happy if I get more dips because the trend will reverse in terms of FPI outflows from India. I think I made this point. This was a more India-specific selling. I haven't seen a $15 billion outflow in like 20 trading sessions in a long time. I mean, even if you index it, this is previous correction, is still a very large number. And somehow I think the bit of slowdown in growth momentum was there. I think it's not that it came totally as a surprise. Yes, there were more negative surprises in earnings. So I think that, in my view, will reverse, with this. And even a lot of the Trump trade in terms of US markets going up. See, S&P 500 trades 27, 28 times. It's not that it's cheap. The US 10-year bond yields have already sharpened. So it's not that they can continue to go up. In the medium term, you feel like. So I think a lot of the Trump trade, as far as US markets are concerned, are in the price. Maybe 80, 90% is in the price. So that should normalize. I think the key trigger would be the size of the China stimulus, because if you see, stimulus is market driven, but if you see the GDP deflator index, it's been 5 quarters now, almost 6 quarters now of GDP deflation. So this is double the deflation they had post 2008. And we've seen what happened with Japan. It's not easy to come out of this once you're a very large size economy with aging population, real estate being 30% of the GDP. So it will take time for China to pick the economic growth back. There is still distress, there. So my sense is this trade, which is sell India, buy China, I think will taper down, as I said. In the short term, because of the size of the stimulus, depending on what they announced, I think there could be a bit of an interim movement. But the overall trend has reversed, and I think we will probably see better days for equity markets as far as India is concerned.
Okay, another segment of stocks that we need to look at is renewables play. So Trump, good for oil, and we played out a soundbite for you a short while ago where he said that we have the liquid gold more than even Saudi Arabia, not interested too much in renewable energy stocks. So let's look at what Orient Green Power is doing, KPI Green, Borosil, and some of those kind of counters, SJVN, Sterling Wilson, Inox Wind. Let's look at some of those and okay, a KPI Green in a bit of a squeeze. Though having said that, India's push for renewable energy is very, very clear. So nothing changes over there. Gurmeet, I'm trying to understand if we have seen enough of what a Trump administration looks like from sectors in the US as well as for India. Because we've looked at it in a minute or in a very narrow way so far. We're looking at it from IT, pharma, but there's a lot more that could unfold, right? He is an unpredictable man. We saw that in the first 4 years of his term.
No, he is, and it's a trifecta. It's the Senate, House, presidency, all three. It's a sweeping red story. So that's another thing we have to factor in for. But as I said, everything is relative. So and our share in US exports versus what China is minuscule. So I think that's where the impact would be more. Speaking of renewable energy, I think I see a lot of euphoria like defense stocks in a lot of pockets, especially the producers, the generators, which are, look at the way most of these stocks have done. But there is a lot of opportunity in the transmission space. The transmission capex, if you see the NEP plan, could be upwards of 4 lakh crores, which means I'm talking about grid lines, which is measured in circuit kilometers. That's going to double in next 5, 6 years. We are talking of transformers, insulators, etc. Huge opportunity there. You're talking of substations. You're talking of HTVC, which is the technology used for transmitting high amounts of energy over long distance. So I think there's still some value players there, like a power grid, trades, pretty reasonable, more than 50% market share in transmission. NTPC now has NTPC Green IPO coming. NTPC itself, even on thermal, because of peak power deficits, has a very high PLF, and they get incentivized. The thermal producers have incentive when you have more deficits and the plant loading factor goes up. And they're adding almost 40, 50 gigawatts in thermal also, other than a huge plans for renewable. Similarly, a lot of opportunities in transformers space as well, on PCBs as well. So my view is the transmission value chain is where I see huge opportunity. And if you see the largest supplier of the world power's transmission company has actually given a warning of it being overwhelmed with the kind of demand we are getting from data centers and most energy sources. So I think that's one space to me which looks very secular and valuations look reasonable.
Okay, so some of these valuations do look like they are all over the place, won't deny that. But really, the question is that how far does this Trump trade go, and where really can we move next with it? Gurmeet, in the days to come, what would be the one space which you think hasn't seen that bump up, the 2 or 3 stocks that are on your radar?
I think one thing I'm, with Trump and or without Trump is the digital space. I think India follows US with a 15-year lag. So if you see in 2008, that crisis, financials were 35% of S&P 500. Today, Nifty financials are 33%. And that time, tech was 12%, 13%. Now in Nifty, tech is 12, 13%. Now, if you see now S&P 500, tech is almost 40%, right? So I think the digital, once you have the kind of digital infrastructure we have created, we do not have our own e-commerce players. We do not have our own OTT platforms. We do not have nice payment plays as well. no semiconductor play as well. So I think we should have a little overweight digital portfolio, and I think that is where India has a clear advantage. So something in e-commerce, something like a Zomato. I don't know how Swiggy does, but I think could do pretty well. Something like a marketplace like a PP fintech. Now, once you have a use case, you can you can have multiple stacks being built and multiple models getting can be pivoted out of that. So PB Fintech, if you see the numbers, they are already not their trail, which is the renewal premium. They are already talking of 700 crores. They are already at 1,000 crore quarterly revenue. This number can similarly go up, and as I said, more the model can be more pivoted. There'll be more plays, I'm sure, in OTT and other spaces as well. So we are trying to carve out a digital portfolio which something mirrors what happened in US, where you had maybe 5, 6 companies which became $1 trillion in last 10 years. So that is something we are looking at. I think pharma outsourcing, which I told Neeraj, would be a huge opportunity. It's something very similar to what we saw in 90s with IT outsourcing. And the last one, which I really like, and I'm taking 2 minutes more, is this entire recycling thing. I think it does so much harm to our Mother Nature Earth that now it's becoming, there's no choice. So water treatment, water desalination, plastics, lead recycling. Look at the overall opportunity in waste management. India is not even a fraction of that. Forget about being in single digit in terms of market share. So that's something, these are the few spaces I look at it more from a fundamental perspective.
Okay. Well, thanks for that, Gurmeet. Now, Jay, I would like to come to you. Before I ask you a question that I want, let me first ask you for a closing strategy.
I have a PTSD on Dixon Technologies. It's quite a high risk one. Be very strict about the stop loss, 15,440. And as I said before, it's probably doing a blow off top, and probably the stock will likely to get to about 16,600 in a day or two. So keep an check to about 15,900 or 16,000. And don't linger if the stop loss were to get triggered, because this is in the last phase of the move from a medium to long term perspective.
Okay. Jay, the other set of stocks which have done well today on some numbers or news or otherwise, one of them is Polycab. After hitting lows of 6,300 or thereabouts, has bounced back from those lows. Today is up another 4% on an order win. What do the charts suggest here?
See,
you track this one very closely, I remember.
Yeah, that's right. See, this has probably topped out, and if you look at the daily time frame, we look at markets how they make the move from a significant low or high. When the markets moves in a non-overlapping fashion, either up or down in a 5-step move, that signals a reversal either to the downside depending or upside depending on the direction of the 5-step move. So from the high of about 7,600 and change, this stock has come down to the low about 6,400 and change in 5 steps. So this looks like the bounce is corrective that we are seeing in the last few days. So and from a medium-term perspective too, it's the recent high is not conforming with its momentum. So it's signaling that this is a significant top for the stock. But we wait for confirmation. If the stock were to break below 6,400, that will confirm this is a medium to long-term top for Polycab.